I'm your host Chetan, and today we are diving deep into the innovations, challenges, and opportunities shaping the future of transaction banking. Today we have a truly exceptional guest with us, Sridhar Kanthadai, a distinguished leader with over 3 decades of experience in the financial sector. In the past, Sridhar has served in the senior positions in the transaction banking world, as well as a board member and advisor. His most recent role at JP Morgan includes Head of Payments for Asia Pacific and Global Co-Head for Payment Rails and Value Added Services. Sridhar has also rocked senior positions at Standard Chartered and Citi, revolutionizing the transaction banking across Asia Pacific. Our second guest today is Vivek Deshpande. Vivek is currently Executive Vice President and Client Partner at Intellect Design Arena. With an impressive track record, he brings over 2 decades of expertise in sales, client experience, and strategic advisory. In the past, Vivek has also made significant contributions at HSBC, leading the cash management business across Asia Pacific and driving innovations in digital and sustainable solutions. His extensive experience spans across payments, treasury services, and transaction banking, making him a true visionary leader in the industry.
Thank you. Thank you for having me.
Sridhar, given your long standing experience in transaction banking, what significant changes have you observed in transaction banking in the recent years?
Great question. Um, First of all, let's anchor what transaction banking is. It's about meeting business needs of clients. So transaction banking capabilities are built around an existing or evolving need. So it's not build and they will come kind of a approach. I think one of the biggest changes you've seen in the last maybe 20 years and especially in the last 10 years is digitization. So the explosion of capabilities now available in transaction banking because of the digitization of processes, of business models. You can easily relate to things like e-commerce or m-commerce as an example. So these are driving an explosion of services and offerings in the space. In the retail side, it's very clear, you can see the trend. All of us are participating in it. And not only is it just about the m-commerce, but you have value-added products or services that are now embedded as part of a payment. For example, at the point of sale, at the point of consumption, you have financing capabilities like BNPL or EMI now available as an example. Now, what are some of the things that are underlying these business model changes and therefore transaction banking capabilities? So one of the biggest change that you see is an explosive growth of transaction volumes. You have the need for immediacy of execution. So as an example, a corporation can send a payment instruction to a bank and the bank can process it after 2 hours because it's a payment to, let's say, a vendor. I'm not suggesting they should take 2 hours, but I'm saying that's the normal business model. But if you walk into a coffee shop and it takes more than 5 seconds for your payment, whichever the mode of payment, whether you're talking about a credit card or a debit card, if it takes more than 5 seconds, that customer experience is lost. And so it's not the value of the payment that is going to dictate the customer experience. It's how that payment is processed immediately in the context of the need. So, you're finding that that's a very big trend that's happening. It imposes a need for transparency of infrastructure, because if your infrastructure is not up to scratch, you're not going to be able to provide either digitization capabilities at the scale or things like immediacy at the scale that is required. You have new forms of connectivity with things like API. You have open banking that's driving an explosion of services. And so all that data now is creating a need for analytics and actionable insights. And so there's a whole host of change that is already underway in the transaction banking space. And so there is a great opportunity for providers to kind of ride on this. Now, clearly, a lot of these things are more advanced in the retail space because of adoption, but increasingly with the e-commerce space is where these trends are meeting. And therefore, a lot of the digital native companies are far ahead in this space. And it's forcing the other set of corporation institutions to also move ahead and consume more of this digital capabilities. And so from a transaction banking capability space, it's really, in my mind, a huge opportunity to invest in these.
Vivek, from your perspective, how have you seen the evolution of transaction banking?
So I'll just pick up, from a technology perspective as well as from a bank perspective. I'll pick up what Sridhar spoke about. And certainly, there has been a very significant and actually dramatic change in the way we as technology providers see transaction banking, and therefore, by default, in the way we provide technology. The first point that Sridhar mentioned was about digital transformation. Clearly, the way banks have embraced digital platforms to enhance customer experience, to streamline their internal processes, and go faster to market. And this has all been delivered through online banking, like web banking or mobile banking. That has been phenomenal. So that has made our technologies also evolve very quickly to be able to provide these kind of infrastructures to banks. Second, I think one of the biggest impacts has been exactly what Sridhar mentioned, what we call real-time payments or faster payments in some markets. And again, the way they have completely revolutionized the world of payments, and the way I see it is these payments, these are much faster, much cheaper, much more immediate, and much more convenient than the traditional forms of payment. And the growth in volumes has been so significant or so massive that it has forced us to redesign the way we operate our payment platforms. So complete redesign of our payment platform. So that has changed for us. I think what has changed for us also has been with sudden spurt in digital banking. It has been accompanied, unfortunately, by a massive surge in cybercrime. And therefore, what are the ways that we can help prevent cybercrime? And we call it cybersecurity, which has become a big business now. It has also been driven by several technologies like biometrics, uh, authentication, multi-factor authentication, encryption, etc. So those are technologies which have come in. Sridhar spoke about AI and ML, and AI and ML again are being used in a lot of payment technologies. Just as an example, in trade finance, for fraud detection, for monitoring of transactions. So again, that's one aspect of technology that I believe has completely changed or wasn't there. 12 years ago, no one spoke about cybercrime or cyber technology. So these would be some of the few technologies that I would say underpinning the growth or the evolution of transaction banking in terms of what's being offered to corporate and institutional clients by banks.
Sridhar, there's a lot going on in transaction banking right now. What can banks do to stay ahead and better align with changing customer priorities? And what actions can banks take to effectively prepare and adapt to this new landscape?
Right. Well, banks have a unique opportunity, I think, in the transaction banking space, because as Vivek just mentioned, the digitization requirements mean business model changes and opportunities. And so you can now think about developing capabilities to support these changing needs for clients, which are rapid in nature, and providing an opportunity for new revenue streams. That's important. But I think if you ask in short what they need to be investing in, I'd say you have to follow your client priorities. Whichever is your client segment that you have, make sure you understand their needs and their priorities. Invest in solutions. And again, going back to what Vivek said, these solutions have to be scalable. They have to be fraud proof. They have to be cost effective. And in the words of one of my ex-bosses, you got to make them faster, you got to make them safer, and you got to make them cheaper. And lastly, I think the moment you have a higher level of digital experience, you need to have a better integrated ability to deliver these services. So one of the pitfalls about building new services capabilities is to build them in silos. And it's fair, building technology is not easy. So you have a number of teams, but you end up building them in silos. And so creating that experience that is more relatable, connected, and focusing around things like fraud, cyber, personal data protection, which is an important element of what you need to do because you handle all of these things, using AI and ML technologies. And so these are some of the ways that you can then bulletproof your capabilities. So follow your client needs, build them at scale, cheaper, safer, but also use some of these new technologies which will help deliver those. In response to your question, Chetan, I did talk about the transformation of transaction banking, but we all know that technology is the power that underpins transaction banking. And so, how are tech firms adapting to this to support banks better?
No, no, absolutely, Sridhar, and that's a very good question. As the world around us has adapted, your customers have adapted, and you have adapted. We as technology firms also have had to adapt significantly. I won't talk about the technology piece here. I'll talk about more how, as a firm, we have adapted in terms of processes, structures, and even some tech adoption. So, if you look at the people part of it, number one is skill development. What we are seeing is there is a growing demand now for professionals with skills such as cybersecurity, blockchain, data analytics, AI, ML, etc. And we realized that many of our people, or most of our people, didn't have those skills. So, and when I say we, I'm talking about the tech industry as a whole. And so there has been a significant amount of investment in terms of upskilling our teams and people through training programs and certification. So that's one, which is skill development. The second part, of course, which follows is the recruitment. So the recruitment strategies have changed to now actually include specialized or specialist hiring, again in the fields of cloud architecture, for example, data analytics or data scientists has become a big zone, and similarly the other areas that I spoke about. And the third piece has been the formation of cross-functional teams, and this is an industry-wide practice that has really proliferated, where we have teams, and we had that walkthrough of the design center for you, Sridhar, a while ago, where you have the benzene teams. So cross-functional teams comprising development, designers, data analysts, business analysts, all of this together is fostering collaboration. They're allowing us to get diverse perspectives, but also at the same time build in a certain amount of robustness in the way we are designing solutions for our clients. So that's on the people front. On the process front, a word you would have heard used quite often and unfortunately quite loosely is agile. And that's something that has, in a structural way, helped us to eliminate or break down the traditional hierarchies. What it does is, by having agile teams similar to the cross-functional team that I spoke about, we are able to now, our customers are able to deploy solutions much faster. It promotes greater innovation and much better collaboration between the customer and the software provider teams. So that's one part of it. The other is, another word which you would have heard is called DevOps. It is actually DevOps integration, which is essentially the integration of the development and the operations teams. Again, that has fostered what we call a great enhancement in terms of what we call CI/CD, or continuous integration, continuous development. And that again has given us huge amount of benefit in terms of developing state-of-the-art solutions for our clients. Finally, again, collaboration tools. There's a whole lot of usage of collaboration tools which we as technology firms use. For example, Slack or Microsoft Teams, and even project management team technologies like Jira and Asana, which help us collaborate much better with our client organization. So all of these are changes that we are adapting to in terms of people, processes, structure, technology is adopted. But I also see that banks, they have adapted over the last 9 or 10 years, which has forced us to then come into the game, which is in terms of reduced dependence on their in-house IT teams. You would have probably seen that in JP Morgan or Citi or Standard Chartered. Over the last 10 years, the debate over make versus buy has slightly now tilted towards the buy for specific sets of technologies, especially those which require newer technologies, more current knowledge, market localized knowledge. That's where banks, even where HSBC, where I worked, where we started tilting towards being more open towards buying and outsourcing. Also, of course, driven by the emergence of fintechs, which gave us access to the latest technology and the latest way of thinking. So that's been embraced by open arms, with open arms by us as technology firms, and banks are depending more on us. But at the same time, it opens up new avenues for us to think in terms of how do we adapt to a sudden change in the bank's thinking of make versus buy, because their traditional discomfort with buy still remains. So how do I enable that or facilitate?
You make a very important point, Vivek. I think while you didn't touch upon the technology aspect itself, I think the importance of cloud and the use of microservices especially help you deliver these capabilities in smaller chunks and be able to fit where your services are needed, as opposed to building monolithic, big products. So I think it's a great example of how, technology firms are adapting to the needs of your customers.
Given the rapid evolution of technology, Sridhar, what do you see as its role in transforming transaction banking?
Well, as you just introduced, uh, the biggest trend that is impacting transaction banking today is the digital shift. It's fueled by the adoption of retail consumers, primarily as a starting point, the explosion of things like commerce, electronic or mobile commerce. But not just that. You also have a lot of other services that are now consumed online. For example, internet trading, brokerages, consuming things like insurance. And so you have an explosion of services that are digitized, and therefore they are now powering the need for transaction banking capabilities. Transaction banking, from an institutional or corporate standpoint, is much slower in adoption because, by its very nature, corporations or institutions are more risk averse. They need more safety, they need more fraud protection. And so while they will adopt technologies, they're just a little slower. And some of the digital native companies that offer these services on these platforms are taking the lead in making sure that they can consume these new capabilities. Now, that's forcing the more traditional companies to evolve, to change their business model, to come up with new ideas. As an example, you would buy a replacement tire for your automobile from a dealer distributor, and you'd go and buy 4 tires for, I don't know, equivalent of $400. What if you had the opportunity to buy these 4 tires for $10 each and 1 cent a mile? And now you have a completely different proposition, but it's a very, very different set of business requirements to satisfy for the tire manufacturer. Because not only do they not get the full value on day one, they now have to have a billing model and a way to receive money from the consumer. So there is now a credit decision to make, there is a payment decision to make, there is a reconciliation decision to make, and we talked about transaction volume explosion. So effectively now you have a billing on a monthly basis, and so instead of a one transaction, you have potentially transactions every month for the next five years. And so these are the kind of business model changes that are being reimagined by a number of companies. And this is just one example of many. More specifically, things like technologies like AI and ML are being increasingly used to solve a whole host of problems associated with things like money laundering, sanction screening, for an example. The need for fraud validation, as the number of transactions increase, values increase, and cybersecurity issues come up. So there's a whole reason and need for fraud validation. And there are complex algorithms that technologies are now made available that can help risk score these transactions, and only a certain set of transactions that fail the risk score are either rejected or put into a bucket for more reviews. And so technology today is enabling many of these things to evolve in fashions that we have not imagined 10 years ago. And even in a simple example as real-time payments, instant payments, whichever name you use, the traditional way you do a payment, a bank would do a payment, is they'd receive a payment transaction, check if you have enough money in the account, and if you had money, they would move forward with the payment. But What happens if you can't do a credit check at that point in time? Your access to the bank account is not available. Now, ATMs had solved this problem years ago, as an example. And so, can you do a credit decisioning on the fly? And how does it change the business model of a provider? So, these are the things that fintechs have evolved more rapidly, for example, than banking corporations. And so, one of the ideas that you have is that these new technologies are now enabling the ability to reimagine processes as well, not just outcomes. Outcomes can only be driven if your process changes. You can't really have old process and try to deliver new outcomes.
Vivek, considering your role as a technology solution provider, how is technology changing to impact the future of transaction banking?
So I'll speak a little bit about how the architecture has changed, and it's dramatically shifting as we speak. But one of the things banks have been crying out, our customers have been crying out is, please simplify technology for us, make it easier for us to consume. And I think that's been what's been driving a lot of the changes in the architecture that we see. And I'll give you a classic example from Intellect. Uh, we've recently launched our groundbreaking uh, technology platform. It's what we call a composable, intelligent, open finance platform, and it's been designed on first principle thinking basis. And I can tell you, it has dramatically simplified technology for our clients. The way they imagine the technology and the way they consume technology. The technology, the platform is called emac.ai, and I'll explain what it is. And each component of it actually goes into how architecture has changed. So E is for event-driven architecture. And today the architecture is such that systems should be able to respond to clients' events, whether it's an operational event, whether it's a regulatory event, uh, and enable the bank, for example, for real-time payments. The banks have to respond immediately to a request made by a client. So that's event-driven. We have more than 530, 35 events, for example, within emac.ai. M stands for microservices. And today, I think, Sridhar, you referred to it, in one of the episodes, monolithic architecture is being replaced by what we call microservices, where applications are now becoming much smaller and broken down into smaller applications, which can be deployed by the bank independently and separately. So they're developed, deployed, and scaled separately. And what that does, therefore, is gives banks immense amount of flexibility. It gives them the ability to go to market faster, and it's much iterative development. But most importantly, what today people call composable, it gives them the ability to compose their own solution by picking up various modules, if I may use the word. A stands for API first. And I think we've spoken enough about APIs, but essentially, if I were to give it in brief, it enables banks to integrate or connect very quickly with third-party solutions or with fintech solutions. And that gives them an edge in terms of innovation, gives them an edge in terms of collaboration. And of course, faster, deployment of the solution and go to market. The C stands for cloud native. And as banks are now hosting applications or want to host applications in a more scalable, in a more flexible, in a more cost-effective manner, and the cost of infrastructure of hosting solutions on their premises today is extremely high. Cloud native solutions are the way which most of the banks or most of the customers are moving towards. So the C in emac.ai stands for cloud native. H stands for headless, where essentially in very, very simple terms, it means while we give our underlying technology, it's built in such a way that it enables the customer or the bank to build their own user interfaces in the manner that which they design. So the front end could well be the bank's, whereas back end is powered by us. And the .ai stands for AI, which I don't need to explain. Apart from this, in terms of architecture, a couple of other changes. One is very data-centric architecture, which is constructed around making sure that we have data lakes, we have data pooling in such a way that it makes handling of large volumes of data very simple and effective, and then being able to analyze that data to identify trends and make predictions. And the last one is security enhancements. This has been a huge shift, and architecture has to shift. It's not just the technology or the code. And the architecture in such a way that it is zero trust security, if you have heard of that term, and secure coding practices. So all of this putting together, so EMAC, as well as data centric architecture, as well as security enhanced architecture, these would be the key ways by which architecture is changing. You've also heard of low code, you've heard of no code, you've heard of secure code. So there is also now what we call assisted code and generative AI code. So everything around us is changing. So it's not just the architecture, even the way we are coding is changing.
Many trends such as digital banking, mobile payments, blockchain, and open banking are influencing the future of transaction banking. Can you shed some light on these trends?
Now, digital banking is something that we've all experienced as individuals, and the set of experiences or capabilities that transaction bankings offer their consumers, the customers, is well evolved there. I think the opportunity there exists when things like embedded finance. Now, mobile payments, for example, is ubiquitous. They're very well established. So you have payment applications, you have wallets, you have capabilities such as instant payments. All of those things are now available at the tip of your fingers effectively. The opportunity there is around what other value-added services can you add. Where you have consumption or a consummation of a transaction, are there things like financing services that can be offered? So those are the possible opportunities that arise there. Open banking is a really interesting field. I think between regulatory changes and the growth and rise of fintech, this is an area that has actually seen quite a lot of growth. And while we think about it in the context of consumers, I think one of the bigger examples that is transforming transaction banking through things like APIs is the ability now for individual banks to offer multi-banking capabilities, whether for transaction initiation or for things like aggregation services, reporting services. And so a whole host of services that were historically more complex to deliver are now made available because of open banking, which enforces that data is now made available and now you can aggregate it in different ways. Blockchain is another interesting area. I think rather than talk about blockchain, the more interesting thing is the fact that, tokenization, which underpins blockchain, is an application that has got wide usage across transaction banking. And I think you'll find more of it embedded in capabilities. They are used in fraud prevention. Think about delivery versus payment for transaction settlement, payment versus payment for FX settlement. Think about the opportunity to digitize assets and have fractional ownership. So you could have a small part of a real estate, you could have a small part of an artwork, for example. So all of these abilities now are made available using the tokenization principle. And so there are, again, as I said, explosion of opportunities, which comes with explosion of transaction volume, which comes with more requirement for scale, security, fraud prevention. So the themes are not changing dramatically, but the opportunities to incorporate these themes in a variety of services is continuing to evolve.
Yeah, just to add, Sridhar, to your point about exploding transaction volumes, and I can tell you from my own previous experience in the last bank that I worked for, and we had a client which was one of the leading food delivery companies in the world. And we were looking at them for an Asia Pacific solution, but for specifically just the first market we were looking at was Korea, to help them, with their banking needs. And we soon realized that the transaction volumes they were talking about for Korea, for one client, was more than the transaction bank volumes for all the clients of the bank put together in that market. So that's how the explosion. It's not just a linear increase. It's a hockey stick kind of an exponential increase, and that's the way we also, from a technology perspective, have to design our systems And it's not just about your technology alone. It's about the entire ecosystem design, which we then need to work with our client to say, hey, how is their storage working? Or how is their database also, can it cope with it? Can their core banking cope with it? And can the payment system cope? So very interesting point there.
There's a lot of excitement about AI and analytics in the industry. Could you highlight some examples of how these technologies are enhancing transaction banking?
Yeah, absolutely. I think AI, everyone talks about AI, everyone talks about chat GPT and generative AI, etc. In today's world. But let me just give a couple of numbers which will kind of give a context to this. Just last year alone, it is estimated that AI would have saved banks, just banks, about $450 billion in terms of improved efficiency and increased productivity. So that's just in terms of the saving potential. At the same time, one of the applications where AI is used quite widely across banks is in fraud monitoring. And in most of the banks where they have employed AI for this specific use case, they have seen a 50% reduction in false positives, which is essentially not a hit, but it would have come under your screen and it would have caused you significant loss of productivity, bad customer experience, so on and so forth, so unhappy customers. So coming back, I see 4 or 5 areas where AI and analytics is being used widely now. The first one is the example that I spoke about, fraud monitoring. So there are algorithms which will look at your transaction patterns, and then looking at your transaction patterns, they will detect that there's a potential fraud and they'll alert you. And many times while you're shopping or making an online payment, you would have received that phone call from your bank. That's exactly what it is. It's a fraud engine which is working in the background, and it's an AI powered solution which is actually triggering those alerts. So that's number one. Other one, again, which we have all experienced and we are seeing it in different forms and shapes, are chatbots. And they are largely used in today's world for customer service, customer support kind of functions. But it enables banks, for example, to provide 24/7 responses to clients, being able to then break through geographies, time zones, so on and so forth, and give a seamless, uninterrupted experience. Third area is compliance monitoring. Again, there's a whole lot of burden today, and I use the word burden, on banks, that banks and financial institutions, Sridhar will, resonate. It'll resonate to Sridhar a lot. The amount of time that is spent on compliance checks, primarily sanctions and anti-money laundering checks. So every single cross-border payment has to go through that check. So all of that is now being monitored and filtered using AI tools. So that's the third area which I can see is being used a lot. I see it being used a lot in trade finance, because trade finance, in my opinion, is the most manually intensive industry in the whole world and very paper intensive. And today, for scanning the documents, being able to cognitively read it, so we have a solution which we call the Magic LC in Intellect, for example, which does exactly the same, which will essentially look at your shipping documents or look at your LC, be able to quickly scan it, and uses a mix of AI, NLP, OCR, or optical character recognition, these kind of technologies together to provide. We have boxed it all together to give what we call a Magic LC. It scans the document, will classify the LC, and it will even cognitively read it, and then also using rules be able to validate it. So huge part, what banks would traditionally call in trade finance the middle office functionality, is now being overtaken by, or simplified, automated, partially or fully, using AI. So these are some of the use cases of AI which I think are quite successful. But then I think the world is still yet to see even 5% of the power of AI. And one thing I can tell you, cloud plus AI is going to cause, or is causing, a tectonic shift in our industry. The way the internet came into our lives in 1999 and changed the world over the next 10 years, that's the kind of tectonic shift we are seeing, and we need to make sure we are all prepared for it.
Thank you for the valuable insights, Vivek and Sridhar.
My pleasure.